Good morning, everyone. Microphone check, screen check. Looks like everything's working correctly here. Good, good, good. Welcome, welcome. Yeah, everything's working correctly. Sorry, for a second it looked like it was messing up. No, it is. There we go. Okay, now we got it. Got it. Perfect. I knew something was wrong. There we go. Good morning, SSFTG family, now that I know we're on the right side of things. Hopefully you all had a chance to get ready and rest up and all that fun stuff. Get ready for the day ahead. As per the usual, make sure to read through the morning prep PDF on the right side of the screen. Very important to go through and understand everything that is inside there. Just a quick note for you all before we jump on in today. If you're watching on the YouTube side of things, the stream does have between like a 5 and 30 second delay, which will definitely impact the timeliness of what I may be talking about at any given moment. How's it going, laddie? Yes, I love it. Just want to take a second, like we do every day, to thank all of our new members, subscribers, Academy students, VIPs, and everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. Welcome to the SSFTG family. If you aren't a member yet, you have several different options to check out if you're looking to further your trading education and career. The easiest way to start out is just to join as a member on YouTube. It gets you in the chat room and a little bit more behind the scenes and what's going on. Or if you want more info on how we do everything and what we do every day in our trading approach with over 20 hours and a ton more of video course material, swing over to the main page at SSFTG. So whether you're here for the very first time or you're a VIP vet over on the dedicated stream, welcome. I'm glad to have you trading alongside of me today, analyzing these crazy markets of ours. Let's take a look at what all is going on for today. We've got the morning DP levels. Don't forget to grab those. As posted for you this morning on the Major 7. Nasdaq, S&P Gold, Crude, Euro, Bitcoin, and Ethereum. It's a race every time. We still got those running shoes on, not tripping yet. As far as the news is concerned, we only had one batch of news that was earlier this morning at 8:30 with the building permits. Forecast is 1.6 million. Aside from that, there isn't anything else, really. There's some news at 16:30, that's the API, but that's it. So, I guess as far as the news calendar is concerned, it's relatively straightforward. I was trying to get this site to load up. I was trying to find some interesting data on the ETF inflows and outflows, but it doesn't update fast enough. It says that it updates at 6 a.m., which is a 100% lie, because it's already 9. But, you know, whatever. It's all good. Anyway. Get that out of the way. Get that out of the way. Let's take a look at the larger markets and kind of... Oops. Hang on a second. I goofed. Swap this for the morning DPs. I already closed the site. Hang on a second. Okay. There we go. So we got 14,991. There we go. Okay. Accidentally messed it up. So starting off on the Nasdaq and kind of looking at what's going on in the wider picture that we have here. I mean, all things considered, this seems like they're still holding this jumbotron of a channel to the upside. Now, as it stands, if we look at this where it formed, because remember, the channel actually formed from there to there to there. So given that we're breaking out higher, we broke above the channel highs. Right, so when we have a break above the channel highs, you usually anticipate an equidistant break of the lows. Well, I mean, they did it all in one shot with a javelin straight into the floor, but technically they never broke a new low. So, I mean, really, with this continuation up, this is kind of repetitious of what we've seen before. Maybe not necessarily in measured move distance, because, well, obviously, if you look at the past top to bottom, that was 1852. But if we double that up, right, 18 and 18, 36, 37, right? If we look for a double value and made it to 35.56, 37 is not too much further down. Realistically, this essentially had a double value pullback. It just did it all in one jumbo shot. So when we have that kind of move, one thing that I want to pay attention to is, what are they trying to pull back to? You know, like, initially, the sellers would have been trying to get this move going to the downside, and it totally failed when it rolled back up to a new high. So my first inclination is to look way back at that last swing and say, well, you know, obviously they probably got out at break even there, but maybe this dip is another shot. Let's see where that POC builds in at some point. Please. There we go. POC's back here. And the POC lined up at the bottom of the channel, too. Wow. Man, everything just stacks up in the same spot. What about impulse? What about the initial impulse of the move? Wow, that's way up at the top. Yikes. Okay, that doesn't really change much then. The only other thing that we may have would be a confirmed swing from the bottom as a buyer's pullback. And that's likely going to put it at about the same spot, even further up. So, I mean, really, this is a massive value pullback. How's it going, Ace? Good morning, good morning. We'll see. I mean, obviously, we're zoomed out to a 60-minute chart, but from the 15-minute perspective, we've got ourselves a pretty strong start to a V-bottom. It's just a matter of seeing how they actually keep it going, or not keep it going. They did make a new high over here, so from the top down, impulse style. Of course, God forbid it works. Gotta go back. Hopefully it doesn't mess anything up. Okay, so the POC's still up at 15.315, which means that that's kind of what we left behind. If they can work their way through that, then we'll probably see a rotation back up. Over on the S&P, similar situation. Well, similar, basically identical, except the one major difference here is that the S&P never made a new high, so technically the impulse starts way over here. Obviously, they're going to have a POC up here. Unless something crazy happened on that drop. Oh, right, yeah. Bug data, forgot. You'd think I'd learned my lesson by now. Come on. There we go. POC is still way back up here, 44.43. Left way back in the dust. But one big key, gigantic volume node that's stepping up to the plate. So with a V-bottom, higher-low rotation, I mean, if the bulls are going to try to step up to the plate, that's the spot. Gold seeing a nice rotation to the upside here. From a channel perspective, if we were to go from the top all the way across, I'm going to anchor it here because it makes more sense, and we plop that down on the lows in terms of what fits, we can see that it doesn't look like it really fits anything. But given the structure that we've been looking at on a lot of these markets, this seems like they just overshot the lows, and if we do rotate back up to the highs, we'll probably overshoot the highs too. Don't necessarily look to sell immediately when we get to the highs, even with a prevailing bear trend, because of this being a big clue. This could be a huge clue in the sense that I don't want to sell right at the top of the channel. I'd rather wait to sell an overshot, maybe even a trap above the previous swing. So if I'm a long and I'm trying to look for opportunities to the upside, that opens the door. There's a lot of potential distance. From the impulse POC from the top to the bottom, they did jostle around a little bit here. So with a bottom-weighted POC at the base, buyers are very obviously going to be looking for a continuation up if they're able to get their hands on it. That zone's anywhere back in the 1750s. The closest they've been able to get is 58. So we'll see. The larger picture from all the way at the top across the entirety of the move will give us a bigger picture of what the larger flow is looking like, and that still has a busted POC back at 1794 that's kind of hanging out and waiting. That'll be the upside objective, and if you look at it structurally, especially if it takes a little time to get there, what a beautiful overshot above the channel high directly into a POC after an overshoot on the lows. It's perfect. There's that forecasting again. We'll see if it actually happens. Over on crude oil, on the 60-minute perspective, the market's just with a jumbo spike in channel to the upside. But remember, the reason we went out to the 60-minute in the first place was to look at this wider trend, which is still intact. It has not broken a new high. And as long as that new high has not been broken, the sellers, even though it looks like they're maybe having a little bit of a hard time at the current moment, they're still assumed to be in charge. If we're looking at the overall flow of this Let's look back and change that to... Actually, that loaded faster than I thought it was going to. Yeah, either way, we've got the POC back at 68.44, and that's important to note because that's likely all of the sellers that were trying to get the continuation of the aggressive leg. You can see what they were trying to do, right? Nice little flush to the downside, trap above the highs, drive it back down again. They couldn't get the job done, and we have what's known as a rolling correction, higher lows, higher highs. And after we've broken out of that rolling corrective phase, well, what do we really have? We've got wave 1, wave 2, and wave 3. Wave 4, well, if that's going to be wave 4, they've invalidated it from an impulse perspective, which means that this is still likely a correction. That took away all of the perspective that the bulls had to the upside if that was going to be the case. Now, if we look a little bit further down, we've got the initial rally up, wave 1, wave 2, and, you know, again, here, maybe 3, 4, 5, which shows that we're more likely near the end of this move. And there again, there's just not enough room for it to take off. It makes a lot more sense that the sellers are piling in here because everything is in their favor. Until we break above the high. Then things change. Now, from an impulse perspective, realistically, I can't be short until we get underneath 68.44 or something changes. So the bulls still own it as far as I'm concerned, but we do have some potential draft back, if you will, down to that 68.44 as a zone of interest. Over on the euro, we finally broke away with a nice little bear flag continuation to the downside. Might have to do a video on bear flags here. We've got the breakdown after that flag, and wow, jeez, you don't get very many that look this good. You know, normally it's a little bit choppy, sloppy, but that's probably one of the most perfect, picturesque flags I've seen in a while. Nice move to the downside. It did complete its flag objective with a 100% move. It actually went a little bit further. And again, this is one thing that I love looking at for you Academy members. You know these levels. You're looking at like an L1, L2 blow off. So you put L1, L2, or even the L3 zone. And you're usually looking for around that L1 to be the blow off distance. That's why we watch these areas. Even on blow offs, they can create zones of interest as offsets. So we've got reversal plays, and you know, we're seeing the sellers running out of steam and trying to push back. Maybe this ends up being another flag. The trend is still very much down. I don't know that I like this as a channel, though. I think this fits much better as a wedge. We have an ascending wedge and an otherwise bear trend. The larger perspective would be out here. I hate the way that looks. It started off this way, then it broke down, so I guess that fits. I don't like that it fits, but I guess it fits. I would rather anchor it here just based on structural support. But technically speaking, you would have had these lows to work with. So that would be the base from an algo mindset. And we can see, I mean, there was a mess of price action that happened on there. That was that small little pennant. And then a continuation down. Another really picturesque pattern there. And follow through. We're starting to reverse above that. If the bulls are going to take this, it's got to be like higher low. It's still very early to the party, is what I'm getting at. We did overshoot the base, but from the impulse to the bottom, I mean, well, actually, they don't have that much work to do. Wow, they traded a ton of volume down at that completion. Holy moly. 17,750. If they can get above that. Time to get at least back up to the channel highs. You know, maybe back to re-challenge the 1/8s, 1/8 We'll see. Bitcoin, nice little flushy dump down to the 40,000s. Did it hit 40K? Nah, almost. Almost hit 40,000, but big potential V bottom. I mean, realistically, what's going on here, this looks like an avalanche wedge. When you have an avalanche wedge, you're just waiting for the market to break out of that structure. But they kind of broke out of that wedge, you know, with a funky overexhaustion breakout. Not unusual for crypto, to be totally honest, but this next pullback would make a lot of sense to see a higher low at around like the 42,000s and a nice continuation potential. Low probability, massive reward versus risk type reversal scenario. Sellers still in control until we have more proof. Ethereum, same situation. We're getting more continuation to the downside. But here again, if the bulls are going to look for that reversal play, then they've got an option at around 29.49.5 or so with moderate probability. I mean, again, it can't be higher than like 35%-ish. But in terms of reward, they're looking at, I mean, what, 3 to 1? Not 5 to 1 at least. Back up to the swing high. I mean, it's crazy. So traders will take it. They just know, I mean, the probability is not great. That's what you got to deal with. All right, swapping over to the S&P and taking a look at what's going on over here. Did this site load yet? I want to see these ETF flows, but this website sucks. Anyway, looking at the bigger picture here on the S&P, we can see that we do have a very sharp reversal off of the lows, but that's okay. It still fits the bill in terms of the overall momentum that we've got going on here. We have broken above the POC down in the 50s. I just accidentally moved it a millimeter, so it's got to recalculate completely, of course. So in the overall movement that we've got going on here, we've got a lower high, we've got the transition down. Let's look at what these sellers would have been expecting. We've got the sellers, actually the last swing would have been, this is a mess inside here. Would have been over here. That's nasty. We got an L5. If there was, I mean, man, if there is such a thing as an L6, there would be an L6 because that would have hit it. Eventually did roll to the downside, and with such a heavy breakdown, you'd expect to see the next pullback to be an L2. They couldn't even get an L. I mean, maybe depending on where you were looking at. You know how the S&P is with its rounding. They may have gotten an L1 inside there. That wasn't even close. We've got another L1. Sellers are trying to really take this to the downside, but they just got slammed. So the reversal point of interest right now is going to be just a total reversal off the L1s. We know that the sellers were selling there. They would have been trying to the whole way down. They got dumpstered, and those sellers who were selling at the L1, they know when you have that sequence of L1, 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 over and over and over and over and over, you get the idea. Eventually, it's going to have a deeper pullback, which is usually an L2. If it goes to an L3, though, that causes some problems, and now these sellers are a little bit underwater. They're selling into the L2s, selling into the L3s, but they're looking to exit everything now back in the L1 territory. That means that all of the swing longs are looking for longs down here. So that's the hot spot on the S&P as far as swings go. Right inside this area there. Reversal, break-even traps. That's going to be the zone of interest to see if we can get down there. Now, there is a little bit of a caveat with this, because we have to play this from a realistic perspective. With this kind of movement, that wouldn't qualify 5 waves down to a new low. That would have to be 5 waves down to a higher low. And, you know, there's nothing necessarily wrong with that. It's the same thing that happened over here. But when you have that type of scenario, it's got to bring some extra proof. Hey, Steven, how's it going? So, you know, being an immediate buyer right out of the gates, sure, maybe for some, like, out-of-the-money calls or something that are really low risk or whatever, but those are also going to be really bad probability. So, again, low probability, high reward. Or we're waiting for some type of reversal patterning to go on in here. The problem with that is it might not happen until 2 this afternoon, you know. Just gotta wait. Looking at the start of the day on the 2,000 tick perspective and kind of kicking off from here. Let me find my favorite zoom. There we go. We've got the upswing, which really, I mean, this whole drive up would have been the attempt. And they did have a very nice, clean break in a continuation. Beautiful. Just a break and a retest. Hey, Vicky, how's it going? Good morning, good morning. We've got the sellers who are trying to continue this down. Now, remember, with this break, we've got the pullback and a new high. And if we go back to where the session actually started, they've got kind of a wonky-donkey little low down here. We've got to use this one. That sucks. If we go and take this. Oh, okay, cool. I'm never sure, so I don't want to jump to assumptions and then have the wrong person. You know what I mean? It's good to have you. Good to have you in the room. Good to see you. We've got this really nice continuation to the upside, higher low pullback, maybe a little bit of a one-tick trap on the base. Perfect continuation for the upswing. And with that perspective in mind, we've kind of already got the break 2 legs up, right? So with the total pre-market all in all, job done. Now, is it pretty? Not really, but it is what it is, you know. Even if we are looking at a wider channel like this, we've got the break and the retest. It all fits. So if we're looking at the continuation down, then we've got the bear cycle lower, like so. And we've got a break and several legs down here as well. One thing that is standing out, of course, is that this is seemingly, at least, trying to go for a spike in channel. Looks like they're getting it off the bottom, which also has a break and a new low. A lot of things are starting to say that this pullback is starting to come to an end. If we take the impulse POC from the bottom to the top across sessions, hopefully it'll work. Excellent. That's the kind of stuff that I like to see lining up. Yes. 43.61.75. Man, I love it when that happens. You've got the POC lining up right towards the completion of this. We already know that the spike has one break and possibly two legs down. Everything is lining up for a potentially very, very nice trap underneath here. We're talking the S&P, and we're talking the open in 9 minutes. Vindictive SOB of a market that it is. If you're coming in early to the party, expect it to be a bucking bronco. We know how the S&P works at the open. Just because there's support here, and it lines up with a million other things, doesn't mean that the S&P isn't going to do whoop, right? Be prepared for that. Looking at the 5 minute, where's the line? There it is, 67.50 is, I mean, we're inside gap. It's not a huge gap. In terms of where we closed, but if we look at where we're potentially going to be opening up, talk about structurally a bit messy, huh? I mean, this line right here, this dashed gray line, this is current price. This is yesterday's high. Oof. That's a toughie. Looks like we've got a nice continuation pulse to the upside, and looks like that's about a 1618, or a 618, depending on how you want to look at it. What? What the heck? Hang on. Full fib. Move that down. Yeah, it's at 618. So if the market does go up, and that's exactly where it is, it's a 618 completion. Like, directly on top of it. So, I mean, from an ABC or an ABCD type phase, if you were looking at it like this, this is one of the most common corrective phases. I guess I could have just done this. This is stupid. It tells me the percentage right there, John. Hello. Anyway, that's kind of the objective. The next pulse after that usually drives down a little bit further, maybe a 50%, something like that. Maybe go megaphone, you know. But right now, we're going to be opening up directly on top of resistance. That makes things a little bit more difficult. If we look at yesterday's impulse drive from the top down, and kind of dissecting what happened yesterday, now that we have the end of the story, complete period at the end of the sentence, etc., we know that this obviously drove down very aggressively, but really strong spike at the end of the day. So while the market's driving down, we see not really a whole lot of volume. They build a POC, try to find that base, and then they fail and break through. When they fail and break through, that doesn't necessarily mean that it's game over. All they did was trap the low. We've seen this happen a million times where it reverses back up. So traders hang out. They're like, all right, let's see what happens. Fails to close back above their break-evens. That's not too great, but bulls support the pullback. They finally close back above break-evens, immediately fail back underneath. So anybody who was long there, when it came back, said, nah, I'm good, thanks. They exited real fast when it hit that break-even point again. And when we have that push back to the downside, that drive lower pushed all the way back down to a new low. And after that low, notice where it came back to. If the traders were patient or had bigger accounts, they were able to still get out at break-even, rotten peckers, and then they took it all the way back to the lows after that. So we know they jumped ship right there. Now, from that perspective, when the market came back to that zone, It was in the pre-market. Hang on one second. Awesome. Thank you for covering that. I appreciate it. Yay. So as far as the overall momentum is concerned that we've got going on, we've got a really strong bull drive to the upside, but we know that the earlier traders may have been trapped in the 55s. So let's look back in the pre-market and see what kind of happened after things stopped when it got back up to 55. 55 was right there. The market screamed above it and then came back, and that was the launching pad of the next move up. So let that sink in for a second. If sellers were short and they were looking at this move up, how many times do you see me do this? I mean, a ton of traders do this. You get that initial drive down. They were incredibly right on the move lower. Worked out beautifully. We finally come back to break even, re-up at the sell side for maybe another contract or like another 10% of the size or something like that, just to see if it'll go. But it didn't, and totally ran it over. So when it came back, they exited not just the ad, but they exited everything. Right? The entirety of the rest of the position that they've been holding the whole time is gone. That was the launching pad of that next move up. So if we're pulling back to that area, I mean, okay, might have some interest here. Was it 55 quarter? 55. 55. Let's do it like that. We have the POC down at the lows, but look how, look how well that lines up for the overshoot that we were talking about at the open. 928 around the corner, side note. But if we get a flush that wants to bury itself underneath the channel lows, what better spot to go down to? Man. It's looking really, really interesting. I did start recording all of the new the VIP material that's going to be launching in the 1st of October, I'm hoping for, and that launch date's looking good, yeah. So it should be pretty solid. I know I launched the Academy early, but I wanted to get that kind of out of the way and updated so that we could move on to the VIP private reserve, get that stuff going too. Should be really really cool. I'm not sure how much time it's going to add. I recorded one, it was like 20 minutes long, so... I mean, we're going to be adding, man, there's a lot more video material that I'm going to have to record. Still got about a week and a half, though, so we should be all right. But it's coming, yeah. One minute until the open. Would love to see a slide down at the open. And here it sits. Awesome, thank you. I'll check it out. All right, we are hitting the open. A little bit of a pulse to the upside. Here it kind of sits. Nasdaq's breaking down to a new low. S&P following through. Sellers generally still the ones in control, but we are getting down into this major zone of interest down here. I didn't get a fill. Okay. Well, let's see. Okay. Let's see what happens this next time around. I tried getting a fill for that bounce, but I didn't get it. I got bottom bid. There's nothing I can do about that. Other than get frustrated. See if they can follow through with a bit more, though. We do have our two measured legs to the downside. We've got a completionary move down into a major zone of interest. The 15-minute does suggest that the pullback could be a little bit further down, though. So, again, if this doesn't hold up here, I don't want to be holding bags. Heck of a bull bar to try to kick things off. Now, the first 5-minute bar, we're starting off, again, I mean, if we look at where we are location-wise, we opened up directly on top of yesterday's high in resistance. I mean, incredibly awkward location to be opening up. But also very important as to how this first candle closes. S&P trying to grind its way back down through the base. Oh, like, really? There we go. Looking for a nice continuation off of that, but I don't mind looking for a little bit of a pullback on the dip. It's early, so probability is low, but reward is incredibly high, which means that the risk is really small. That's always nice. Double bottom, hasn't broken the lows. Another nice bull bar. Nice little continuation, pulls to the upside at resistance. I'll hold out on this last one to see if we can pick up this reversal. It's a really nice spot, but it did dip further than I wanted it to, so I'll mitigate some of the risk. Starting to break above the 66s. If shorts are looking for continuation, this is where they're going to try to press back from. Beautiful continuation back up. Retesting DP as potential resistance now. Volume's more... it's a little bit further up in the 70s. And the node's up at 78.50, of course. I'll take that last one off there. We're seeing a bit of resistance here, and I've only got that one final one. I like this zone as a zone of potential profit. Now, with this break continuation, looking at this area, what I'm looking for next would be a higher low type scenario. We did get a nice follow-through bounce off of that zone. It's just a matter of whether or not it wants to keep it going or not. From the 5-minute perspective, we also have the POC shifted down 63.50, although let me make sure that that's the 5-minute POC. It is not. It's even lower, jeez. That helps even more. Pretty heavy bear bar to the downside, I gotta say, on the 5-minute there, especially given location. And maybe if it wasn't coming off of that previous major swing high, it'd be a different story. But if this bear bar triggers, I have to assume that shorts are going to be looking for at least a swing. Does it fit a 2-to-1? Oh, yeah, it doesn't fit a 2-to-1, so that makes it even better. In terms of settlement, it's more likely then that scalpers are going to be the ones in here. See if this can roll a little bit further. Nasdaq also starting to kind of creep up a bit, but not really seeing that transitional phase as of yet. We've got a continuation of the downside, which rolled off of an L3 into an L2, into another L2. So from the Nasdaq perspective, I mean, sellers are going to be looking for the third L2 in the sequence, which it bounced off of to the tick. I have a little bit of a hard time going short in this market at the moment, but you know, it's there. Gold's taking a little bit of a dip, but not really doing much of anything on gold. Crude oil is just kind of sideways and choppy. S&P lifting further. Nasdaq starting to creep up a bit further now too. Challenge point for the S&P is going to be at 78.50. On the Nasdaq, it's up at 15,120. Yikes. How I wish I had more contracts when going long. Yeah, for sure. That's all good. Depending on when the last time you've logged in has been, which it's been a minute, there's been a drastic amount of changes in the layout and the look and all of that. As far as like the trading approach and style, nothing's really changed from that mentality, aside from your average ebb and flow that you would have with normal market movement. But as far as the look on the screen, I know it, especially if you're not used to seeing order flow, just the order flow in and of itself looks like someone took a buckshot and filled it with paint, you know? So I can totally understand if you're not used to it, like, oh, what am I looking at? The Day Trading Academy is where you would start. So SSFTG, log into the Academy. We just launched Unit 4, so there's about 20 hours of videos. So you can probably skip the majority of Unit 1, because that's like getting started stuff, unless you want to go back through all of it. But Unit 1's not the longest part by any means, so might as well just start from the beginning, you know? Yeah, for sure. Nice little dip back, 43.69 quarter retesting on the POC side of things, although the previous one back up at 78.50 is the impulse holding, kind of, sort of. It would be really nice to see the Nasdaq make like one more good push. The L2s are still holding. Market failing above the highs so far, never triggering in the sellers though underneath bar 1. That's important to note. If we're looking at the developing POC from the beginning here and going across, it started out at 62.50, now it's at 69. It hasn't really changed too much. Gold catching a nice little lift to the upside. Crude oil, though, on the opposite side of that, starting to push down. Hopefully the API will give us a little more of an idea what to expect. This is that possible higher-low transition. Also, a halfway decent attempt from the sellers here, trying to get below the POC. Let's see if they want to fail it. They're challenging it at 69 quarter. POC shifting on the Nasdaq as well. S&P closes it as a doji. Wow. Well, hey, now, hold on now a minute. Wow. Doji? What doji? Now it's just a twin reversal with a one candle doji gap. Yikes. See how the bears respond to this. From the wider perspective on the 15-minute chart, we still have a large distance to go down at 43.42 until we get down there, but now they're under the developing POC as well as the impulse POC. Too many problems. Structurally, though, this is a nice spot. We've got an L4. Ooh. Reaching back up and poking into the POC. Ooh, okay. Oh, man, they closed right back underneath it. Did they close underneath it? Man, they closed on it. Well, that sucks. Come on now. Nice rotation off the lows. Seeing if they can follow up with the next area of interest. Breaking back above. Nasdaq also creeping higher. I say creeping. Nasdaq's picking up some pretty good speed here. There we go. Nice. First zone of interest on the Nasdaq is going to be a little bit further down in the 77 quarters. On this initial reversal attempt. S&P's reaching back up to the 78.50s. Nasdaq's got the 120s. Bullish continuation on the inside bar breakout above 69. And now they're starting to get above that 78.50 POC as well. Well, we might not get that bigger dip that I want. That's not nice. Nasdaq catching a nice rally to the upside. If we look at the overall cycling, they did get the bounce off of the L3, so technically an L1 continuation fits, which would be in the 102s. It feels a bit problematic, though, because we've got that 120 POC, so I know an L1 should hold, but I'm not necessarily expecting it to. I'm going to approach it on a different mindset. S&P creating a short-term little shelf at 77. Aggressive buyers, because you're buying way far up, we'll be trying to buy into that micro shelf at 77. Buy into it they did. Jeez. Nasdaq testing the 120s a bit more obviously now. Still waiting for the deeper pullback sub 100s, preferably into like the 94s. Beautiful rotation to the upside, and the bulls continuing to pulse. Settlement fill from before is going to be at 08. 08 quarter in that area. Still more continuation. That's a heck of a bull bar back up. And bouncing off the L2 like this. Jeez, if they start breaking a new high, this could spark that V bottom. I really wanted that deeper pullback, and maybe we get it still, but the bulls are really starting to try to get this thing to go. Yeah, they're leaving it in the dust. Squeezy, squeezy, squeeze right in the juicer. Ooh, greedy buyers buying too high, maybe getting flushed out. Dip buyers might use those stops to their advantage and bite, kind of gobble them up a little bit here. If they're still looking for a continuation phase to the upside on aggression. I would prefer to see a deeper pullback. S&P finally pulling back a little bit. Did it tick above that little bullish bar on your chart? You talking this guy? Yeah, they did. That's what I'm saying. Greedy traders got trapped up at the top. And now they're getting flushed on. Yeah, if it didn't on your chart, that can happen too. On tick charts are always going to be different. That's just how they operate. When you're looking at tick bars, candle by candle, a little bit closer, you have to focus on what your chart says, because everybody's chart's going to be a little bit different. Let's see if I can get a little bit of a pullback on this for a continuation up. Trying to get the scalp. There we go. Got the scalp on the S&P. Nice little breakout above the POC for a continuation higher, for just a little bump. Not really a whole lot. Would like to see a deeper pullback still. Really wish I had more contracts from that earlier trade. I exited the one because we had that really strong pump down, and I wanted to reduce my risk in case I could buy a little bit more. And then it didn't break the low. If I didn't exit that one right there, I'd probably still be out. I mean, let's be honest, right? Shoulda, coulda, was don't really help a whole lot. I probably would have exited on this next rally up anyway. L1 continuation to the upside. Yeah, I know. The shoulda, couldas are really fun to look back at. Like, man, if only, you know, but it's not how it works. Sometimes you gotta rein yourself in a little bit and keep it realistic. I know those rose-colored glasses are really comfy. It's tough to take them off. I 100% understand. Got about 8 minutes until we move into the extended session for VIPs and YouTube members, so feel free to get those questions in. We'll get those covered for you. The L1s on the Nasdaq are still continuing up and holding around that POC. We've got maybe a little kind of wedge-ish structure going on here. Very early. S&P trying to push down a little bit further. That shelf down in the 7750s, that's much more interesting down here. I didn't get a fill. S&P. You rotten pecker. I didn't get a fill. It bounced up. I missed the scalp opportunity. There's nothing I could do about it. Last one I got to fill. I guess I'll just accept what the market will give me. See if they can follow through with something a bit more obvious now. I mean, the POC they left behind way back at 69. What a perfect spot for a higher low. Was that fit an L4? Yep. Literally perfectly into an L4. Like a glove. That's more my generation humor right there. That's man, Ace Ventura. Oh, I don't know. For those of you who haven't heard of him, I'm very sorry, and you should change that. But man, like the early '90s, I don't think comedy even knew where it was at. It just kind of rolled with it, and the shirts and the style, everything. It's incredible. And now, after shopping for school clothes for my daughter, I've come to realize that bell bottoms are a thing now, I guess. They're coming back again, huh? Full circle. Was that like the third time it circled around? Fourth time now? Just waiting for the Jinkos. They'll have their moment. I haven't lost hope yet. Can you show the L4 again? It was too fast. Yeah, so the L4... if you're looking at the L4 off of the base to right there. So it's off this swing. And with that L4 rotation, typically the next anticipation is going to be an L1, which I mean, they missed. It depends on how you round it. They missed it by a tick, maybe didn't miss it by a tick, etc. And now that they're finally pulling back, the expectation's that it's deeper than they want it to be. It's a little bit disappointing. It's what we've been talking about the whole time. Want the deeper pullback. It did it in a way that didn't allow me to really do anything with it. And the Nasdaq hasn't pulled back far enough to fill anything, so it's just being kind of vindictive right now. We're making the morning work, don't get me wrong, but can definitely feel a personality difference going on here from now to in the morning. Well, it's only been like 30 minutes, but you know what I mean. As far as the POC on the 5-minute goes, we've got 43.80 as the top-weighted POC now shifting, suggesting that if the bulls were in long this morning, and we know they were, their POC was way down at the bottom on the first 5, they've potentially exited. So, Nasdaq dipping. Are you effing kidding me, Nasdaq? I have to cancel it now. What? Oh, you spicy little... Alright. I'll look at this next dip to the downside. It missed my initial entry, jumped like 20 ticks. And now they're kind of pulsing this L2 zone. Because of that initial trap on the top, it's likely that we're going to try to slide down to the lower L2, so I don't want to really increase risk too much. I do still like the long here, though. But we got to start... Now we're starting to get a little bit lower down. This makes a lot more sense down in the L2s for this push-up. And if they do dip a little bit lower towards the bottom of the green box there, then it's not necessarily over, but that doesn't help. Bouncing directly off the lows of the area. And now piercing underneath. I'm going to look to utilize this pop as an excuse to exit. I was not filled on my last one, though, so I still have one down from the bottom. Nice little follow-through bar. Alright, they're going to slide to the bottom of the L3 and then pulse back up. I get it. Alright, I'll take the exit on that next pop. Vindictive SOB of a market that was. Jeez. So I tried buying into the dip. We knew the initial test missed me by literally 1 tick on my limit order. Bounced, I don't know, like 15, 20 ticks. Pulled back, tried buying into it, but we know how the Nasdaq operates with these kinds of things. Hang on a second. We're testing that POC. We didn't break that previous swing, though. See what they can do here. So I tried buying into the slightly larger dip and couldn't get the job done and ended up pushing back down to the lower side of it. Took the escape route for break-evens. Didn't want to bounce. Fine. Now, again, it doesn't necessarily mean that the market can't go back up to the highs, but them losing their grip like that, if we start pushing through the POC, it's kind of game over. Like, what else is going to hold it? $10 o'clock. Okay. Yikes, that wick on... Oh, lordy, lordy. Whoa. That wick on the 15-minute chart is terrifying. Yikes. POC shifting down in the 5-minute S&P. Maybe things have changed a little bit, but realistically, it looks like the sellers have taken over. I'm not seeing any questions coming in as we go into 10 o'clock, so let's shift over to the extended session for VIPs and all that fun stuff. I'll get that link posted for you in Discord if you missed that. Otherwise, though, if I missed any questions or you have a more detailed one that you have you need a bit more time on, shoot those via email, jhb@ssftg.com. Or if you're on the YouTube side, just drop them in the comments below. We'll get them from there. Either way, hopefully you had a great morning of trading. Gave back a little bit there on the Nasdaq slide back. Tried getting it to go, but we've got potentially a lot of volatility here, so let's roll over. If you're ducking out for the rest of the morning, I hope you had a great one, and we will see you all tomorrow morning. For the rest of you, stay tuned, and we'll switch over. Have a good one. Thanks.